Start, and now FTX customers are suing the crypto exchange in a bid to claim ownership of the remaining digital assets holdings. It's a lawsuit representing more than 1 million customers alleges the now bankrupt FTX failed to segregate customer accounts, and therefore those customers should be repaid before the other creditors. Now, the lawsuit comes as FTX founder Sam Bankman-Fried faces allegations of misappropriating customer money to fund some risky bets made by sister fund Alameda Research, and we've recently learned one of those wagers includes a $546 million loan from Alameda that Bankman-Fried used to buy his stake in fintech company Robinhood. It's a pretty curious turn given his claim that he knew nothing of the company he founded. Now, as the FTX fallout casts a dark shadow over all cryptocurrency, joining me now in a Fox Business exclusive is the Bitcoin Foundation chairman and an early investor in Bitcoin, Brock Pierce. Brock, so good to have you with me today. We spoke right at the very beginning that this was all going down. I got your take, but I want to start off with the obvious question. What has the FTX fallout, this very public downfall of SBF, had on the price of Bitcoin and other cryptocurrencies?
Well, this has been the biggest scandal and the biggest event in our industry's history. The impact, though, is not as severe as it would have been if not for the other events that happened earlier. BlockFi, 3 Arrows, the Terra Luna. So the market had already taken a pretty heavy beating before this event occurred, though it definitely took us much lower, and it's been extraordinary. And you commented on a couple of things there. One, Sam Bankman-Fried saying that he didn't have any understanding of what's going on over at Alameda, even though I think he owned something like 90% of the firm, and he's taken out loans to buy things, houses and otherwise. And then just now he got out on bail. So he decided to change his, instead of fighting extradition in the Bahamas, he decided to be extradited. And he said in all of his interviews leading up to that, I only have $100,000 to my name. I don't even know how I'll be able to pay my lawyers. And he somehow was able to make a $250 million bail, the largest bail in U.S. history. And the news that came out today is that we should expect to see a plea agreement. He's going to likely be pleading guilty to some set of charges, probably similar to the CEO of Alameda and one of his other co-founders sometime in the next week or so. So none of what he's told us makes any sense. I think we're all pretty skeptical.
Sure, yeah, that January 3rd arraignment next Tuesday coming up, we'll certainly be watching that closely. You know, I do want to zoom out a little bit, though, because like you said, you know, there were a number of things that happened leading up to FTX, but we've seen a number of other bankruptcy filings, right? You've got BlockFi, you had Bitcoin miner Argo. I believe they just narrowly missed filing for bankruptcy with a $100 million bailout. When we look towards 2023, do you expect to see more of that happening?
I think there's still some shoes to drop, but we've likely seen the majority of it, probably the vast majority of it already happen. And these are mostly coming from upstarts, organizations that hadn't survived what we would call a crypto winter or a market correction. We've been through these cycles repeatedly. And so these businesses either were over-levered, borrowing from each other, and that's where we're seeing this. This has really nothing to do with crypto. This is not a decentralized finance issue. This is a centralized finance issue, and something we've seen time and time again. When companies take on too much leverage, not managing counterparty risk, not marking to market correctly, not having the right governance or risk management in place, these are the events we're seeing. And I think